The government will focus on financial stability for export companies. If they are temporarily hit and they lose some export orders, there will be some interim financing to keep them in business, because their trade will happen over time. So that's why that if they go bankrupt, it's a loss for the country. And since the last trade war, Chinese exports are up 60%. So if the companies go down now, exports will rise later, and it's a loss. So that's why I think that the government will take financial measures.
So another way of looking at it, Andy, is preemptively Beijing is going to need a bigger stimulus response. Can you paint some figures on what that could look like?
Well, I think the government's focus is on stability, not on really stimulating domestic demand per se. The policy focus is still on supply side competitiveness and supply side security. So the Chinese policy is different from the U.S. The U.S. is on demand side. They're trying to get the economy on through the stimulate demand, snowballing effect. And China is very much focused on competitiveness and stability of businesses, as well as local government finance. So I think the motivation is different. So China is not in the business of juicing up growth, getting the over 5% no matter what. It's not like that. 4% is good enough.
Andy, there's a lot at stake here, and there is a sense that exports are the last leg standing. Devaluing the currency, is that an option, or politically is that going to be very tricky, given the Trump's administration on currency manipulation?
No, I don't think China will move the currency at all. The trade surplus is reaching $1 trillion. Chinese currency at some point will have to appreciate a lot. Okay, so there's no case for devaluation at all. And the issue is that how to help the companies to get over this temporary financial stress. Okay, so it's not a lot of money. The U.S. business is about $500 billion. The total exports this year would be $3.6 billion on the goods side. Total would be $4 trillion. So it's a significant piece. But it's not really that crippling. Even if the exports to the United States fall by 20%, it's not a huge blow. I think it's just some business will be hit. So the country can easily sail through. And I don't believe that this is some kind of existential threat. It's at most it's like a 0.5% impact on GDP. Not a big deal.